Blue Owl is a differentiated alternative asset manager with industry-leading direct lending and general partner capital solutions businesses. It's in the process of merging with a SPAC called Altimar Acquisition Corp, ticker ATAC. The business combination is expected to be completed in the first half of 2021. After the business combination is completed, the ticker symbol is expected to change from ATAC to OWL. This is a SPAC merger that several of you have been asking about. So, in this video, I'm first going to give a high-level overview of Blue Owl. Second, I'm going to go over my bull case for the stock. Third, I'm going to go over my bear case. Then I'm going to go over whether or not I plan to invest. And be sure to stay to the end of the video because I'm also going to give you a glimpse into the top holdings in one of my public accounts. All this right after. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up, everyone? Happy New Year and welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. And please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. So without further ado, let's get right into it. What is Blue Owl? So this is a very interesting and somewhat complicated SPAC merger. Usually we see a single SPAC complete a reverse merger with a single privately held company. But in this case, two companies are combining before the SPAC merger. The first being Owl Rock Capital Group, which is a publicly listed company on the New York Stock Exchange under the ticker symbol ORCC. And the second being Dyal Capital Partners, which is a division of Neuberger Berman Group. These two businesses will combine to form Blue Owl. Blue Owl will have a direct lending platform which comes from the expertise of Owl Rock Capital Group. And it will also have GP Capital Solutions, which comes from its Dyal Capital Partners roots. Both of these businesses will be autonomous but complementary. So, what does the direct lending platform do? At a high level, the direct lending platform lends money to privately held middle market companies. On Owl Rock's website, we can see that they originated approximately $22 billion in transactions. And here's a list of their recent transactions. One notable transaction you see here is Airbnb. If you've been following the Airbnb story, you know that early in the 2020 global health crisis, before Airbnb went public, they were forced to find capital just to survive. And if you can imagine, they had to pay very high interest on that capital. One of those lenders that provided capital to Airbnb was Owl Rock. So those are the kind of companies that Owl Rock lends to. Very well-established, privately held companies. So what does the GP Capital Solutions part of the business do? That part of the business will be led by the Dyal Capital Partners side of the house. They are a leader in taking minority equity stakes in alternative asset managers. Here is a list of some of its partnerships. Two very notable partnerships that I've heard of are the technology-focused private equity firm Silver Lake and Starwood Capital Group, led by Barry Sternlicht, who also has his own SPACs. So these are excellent alternative asset managers that Blue Owl will be invested in. So now let's take a look at the investor presentation, which I'll leave a link to in the video description. I'm not going to cover every single page of the presentation, so I also encourage you to check out the investor presentation yourself. Blue Owl will have a market-leading permanent capital base with $51 billion in permanent assets under management. They will have best-in-class fee-related earnings, or FRE generation, with 100%. They will have highly attractive, robust profit margins of 67%, scalable growth opportunities not currently included in the projections, which I'll talk about later, and proven experienced leadership with a demonstrated track record. This slide shows the growth of the industry and the expected growth over the next 5 years. The industry has consistently grown at 12% CAGR over the past 20 years, which is expected to continue. Its fee-related earnings and leading growth profile clearly outpaces its industry peers. And the reason this is important is because fee-related earnings are a more predictable form of revenues. This slide shows their GP Capital Solutions breakdown, and one thing I wanted to point out on this slide was its newly launched strategies. Remember when I mentioned the scalable growth opportunities not currently included in the projections? Well, it looks like the co-investments strategic capital will allow them to invest in the portfolio companies of its private equity partners. So my interpretation is that they'll be able to invest in companies like Airbnb before they go public, and not just lend to them, but actually take equity stakes. The other one is Home Court Partners, in which Blue Owl will start taking minority equity stakes in NBA franchises. So that's really cool. Imagine getting a piece of the profits from your favorite NBA basketball teams. Awesome, right? This slide shows its leading competitive position against Goldman Sachs and Blackstone and other competitors. Blue Owl has proven experience, stable capital, strategic partnerships. They are alignment and large cap focused, and they are leading in size and scale. And if we take a look at the financials, we can see that the combined Dyal and Owl Rock businesses have estimated 2020 revenues of $668 million with EBITDA of $428 million. And they're projected to grow that to $1.8 billion in revenues and $1.2 billion in EBITDA in 2025. Distributable earnings to common in 2020 were $304 million. They expect to keep fee-related earnings at 100% of total earnings, and they expect to keep their EBITDA margin at 64% or higher. So Blue Owl, unlike some other SPAC deals we've looked at on the channel, actually is making money today. So you all know that I look at projected growth with a skeptical eye. But in this slide, they actually break down how they expect to grow from 2020 earnings to 2022 earnings by doing things such as deploying capital from their existing funds, deploying capital from their new fund called Dyal Fund 5, deploying capital from their other new funds, including the Co-Invest, Home Court Partners, and Strategic Capital, as well as increasing management and incentive fees. Blue Owl is projecting a CAGR of 23.8% over the next 5 years to 2025. This slide shows the senior leadership team. 3 of them are founders of Owl Rock and Dyal, and they all have over 20 years of experience in the business. Here's an overview of the SPAC, Altimar Acquisition Corp. They have experience with the very successful Trine and Desktop Metal deal. And be sure to check out my other video on Desktop Metal if you haven't yet. This slide shows the transaction summary. So at $10 per share, they're expected to have a pro forma enterprise value of $12.7 billion and a pro forma market cap of $12.5 billion. The SPAC shares will own 2%, PIPE shares will own 12%, sponsor shares will own 0.4%, Blue Owl founders and management will own 24%, Neuberger Berman will own 34%, and other Blue Owl existing shareholders will own 28%. This slide summarizes their capital structure and dividend policy, working towards a solid investment grade rating, establishing limited amount of long-term debt with a target net debt to EBITDA of 1x. Blue Owl plans to have an attractive 60 to 90% dividend payout ratio, and they seek to grow earnings and dividends by more than 18% annually from 2021 to 2023. So for you dividend growth investors out there, this could be a good stock to put on your watch list. This slide shows that Blue Owl is really a leader when it comes to assets under management growth, fee-related earnings, earnings growth, and profitability. When compared with higher growth FRE-centric firms, it's ahead of the median in all categories except for current assets under management and 2020 pre-tax operating margin. And the final slide I wanted to look at was this peer valuation benchmarking slide to get an idea of how to value Blue Owl. Using the 2020 EV to EBITDA multiple median of 32.7x and Blue Owl's EBITDA of $425 million would give an EV of approximately $13.9 billion. ATAC closed at $11.38 on Friday, which implies a post-merger enterprise value of approximately $14.4 billion. So in my opinion, the company is fairly valued compared to its high-growth FRE-centric peers. So that was my high-level overview of Blue Owl. What is my bull case for the stock? Okay, so I'm not going to get technical here like I usually do in my other videos, but just based on the projected growth that Blue Owl discussed in their presentation, I think that an investment in Blue Owl could potentially double in the next 5 years, including dividends and capital appreciation. Also, based on the market conditions that we're currently in, with a lot of market euphoria and the Fed pumping a lot of money into the economy, I think that Blue Owl could potentially double even faster, perhaps even in the next 1 or 2 years based on pure market speculation. So what is my bear case? So unlike other highly speculative SPAC companies we've looked at on my channel, the only real bear case I have for Blue Owl is that it won't keep up with the S&P 500 over the next 5 years. As many of you know, Tesla just got added to the S&P 500, so I expect the S&P to perform fairly well over the next 5 years. Even though I think Blue Owl will be a profitable investment in the next 5 years, my bear case is that they won't keep up with the S&P 500. Do I plan to invest in Blue Owl? So right now, I'm on the fence. I currently do not own any shares of ATAC. I really like the business model. I like the growth prospects. I like that they appear to be a dividend growth stock. I like the thought of being able to indirectly invest in NBA teams and future Airbnb types of companies while they're still private. And being able to indirectly invest in awesome alternative asset managers like Silver Lake. I mean, Silver Lake is a beast. Many pension funds such as CalPERS, which is one of the largest pension funds in the world, invest in Silver Lake. And I'm sure many other pension funds invest in Blue Owl's other general partners. So that's pretty cool. I actually think that at the current share price of $11.38, Blue Owl has a decent chance of doubling my money over the next few years. But I'll have to admit, private equity and alternative asset management is not my strong point. Here's a snapshot of one of my public accounts. You can see that these are the types of companies and industries I feel more comfortable investing in. So I feel like if I invest in an industry in which I don't have a lot of experience, such as private equity, I'm gonna have a lot more blind spots and make a lot more mistakes. So for now, I think I'm leaning towards not investing in Blue Owl. That being said, if I had to choose a company in this industry to invest in, it would definitely be Blue Owl, based on everything I saw from the presentation and all of those points I mentioned above. And if I were to invest, I would put this in a tax advantage account, such as a Roth IRA, in order to get the dividends tax-free. All right, so let me know what you think about Blue Owl and what other SPACs you're watching. Drop me a line in the comments Be sure to leave a like on this video before leaving. Thanks for watching, and I'll see you next time.